not only to China, but also to Chinese companies having an ambitions to grow globally, and especially of late to ASEAN countries. The opportunities that it brings to companies like ours are immense, not only in our operations in mainland China, but also our operations across the globe, supporting Chinese companies and supporting Chinese individuals. And that has been the basis of our presence in Hong Kong, not only to capitalize on the Hong Kong market, but on the opportunities that the offshore Chinese companies bring to our franchise across Asia.
We've seen the Chinese central bank inject about yuan 1 trillion into the market, and they've also lowered interest rates for mortgage loans. So how far do you think this will go to bail out the very sluggish property market that we're seeing in China? Is this raising any confidence?
The deep problems for the real estate sector, very difficult to address in a short period of time. So I think that it will take some years to resolve, but these steps that the government is taking, like the stimulus package, are very important, very well received by the market, like we've seen in the increase in the stock prices, but most importantly orientated towards restoring confidence in the demand for properties, especially on the retail, to absorb the inventories that are still quite important and easily resolved through time.
What did the Fed rate cuts as well as Chinese stimulus bode for Hong Kong's loan growth?
I think very important. We were very concerned of the high interest rate differential between especially RMB and US and Hong Kong dollar. The Hong Kong market has lost a substantial amount of loans because they have moved to mainland China because the rates are lower and are in RMB. As the interest rate differential diminishes, we hope that this will be a very positive detonant for loan restoration in Hong Kong in the latter part of 2025.
A lot of mainland investors, they're increasingly moving money out of mainland China, and how is the bank helping its high net worth clients manage that capital? Is there any impact in Hong Kong, for instance?
Well, DBS has a very strong wealth management centers, both in Singapore as well as in Hong Kong. As individuals do their IPOs, international transactions through the normal channels, we support those individuals in those companies through our wealth management capabilities. So as the mainland Chinese companies come offshore, and as individuals from China come offshore through the normal channels and legitimate channels, I must stress, we are one of the banks of choice.
The Greater Bay Area, lots of opportunities there. What's in it for the bank?
The connectivity with all the cities in Guangdong, with Hong Kong and Macau, not only in infrastructure but also on disintermediation, in connectivity through Wealth Connect, the Swap Connect, the Bond Connect, and the rest, have been very important elements for our growth. Through Shenzhen Rural Commercial Bank, with our acquisition of almost 17% of our stake, we are the largest shareholder. It allows us to participate from GBA domestic economy, and through the onshore-offshore connectivity of DBS Hong Kong allows us to participate as the GBA companies and individuals move offshore through Hong Kong. So very positive for us.
But are there particular industries that you are keeping an eye on?
Oh, definitely. You see the evolution of the new industries, especially the high technology industries, EV, solar panels, circuits. We are the bank of choice as they move their trade exports to the global markets, especially to ASEAN. We are also one of the banks of choice for diversification of supply chain. With the global tensions affecting the area, we have seen Chinese entities willing to diversify their supply chain, especially in ASEAN countries, where that's the area where we can help a lot.